Yo, what's up everybody? I'm going to show you guys a way that you can confirm your SMT without feeling as lost as you used to. Now, the first way that we'd look at SMT, or always used to look at SMT, was just price in of itself. Meaning that between your main chart and your correlating chart, which is the one that you're going to compare that main chart to, it's usually going to be one that moves in the same direction of your main chart. So it would be Euro USD or JPY USD, or AUD USD or NZD USD. So it's always a comparing chart, one that moves in the same direction. You always want to do that. So once you figure that out, you will see that on your correlated chart or on your main chart, sometimes there will be a volume disparity between the two, or discrepancy between the two. So what happens is, at certain points, one chart will have less volume than the other, creating a situation where the one chart takes out a previous high, because remember, you need to have volume to take out a previous high. So we take out a previous high while one having less volume, and this creates that SMT, that difference in price. Okay. Now, how do we confirm specifically that that SMT has that SMT has formed, that the start and the end point has been created, and that this SMT won't just continue, meaning it will sweep me out or anything like that? Because I think a situation that a lot of people are getting into is getting into that SMT or getting into that trade. Oh my God, this SMT right now, there's a difference between the charts. I see a market structure shift. Let's enter, and then it sweeps you out again. There's a very specific reason why. It's because of PSP. But it's not the reason what you think it is. It's not specifically entering directly after the SMT, which is also a good thing to do, is wait for that PSP after that SMT. So let's say SMT happened. You then had your 5-minute PSP. And that would be a good place to enter, a really good place to enter. Now, just to run it again, PSP is specifically price on these correlating charts. So this would be your Euro, this would be your GBP USD, is price closing in opposite direction. So let's say this was a bearish candle, and then this would be a bullish candle. I'm going to show you guys that now. What we look for is that the start and the end point of that SMT must have a 5-minute PSP. What tends to happen in price, the legit way of moving, I'm telling you now, is that price tends to react off of a previous PSP whilst creating SMT with a candle that is PSP. So your start and your end point of your SMT is PSP, and in between the SMT, you have consolidation. And that is how you stay out of the shitty area of that SMT. Is because the start and the end point of the SMT will always have a 5-minute PSP. So let's run through an example. This was Friday. Let's open up the higher time frame first. I'm going to try and do this entire video in one shot real quick. 90-minute. So what are we going to look for is in Q2, we're going to look for previous 90-minute PSP candles where we can see price reacting off of. So let's look for previous Q2. We are in Q2 right now. You see here's price. Let's look for them. We can see we have a 90-minute right here. I'm just going to draw out what I see, and then we can play from that. Okay, we have a 90-minute right here on the one chart. And then we have a 90-minute right here as well. See if there's one in this session. There's one right here. We can see this one's bullish. And we can see this one's bearish, right? Let's see if we can find more. There's one right here as well. And we can see they start stacking. And the more you have that stacking with each other, it's also giving a form of confluence to your trades. Okay, so now that we understand that we have a majority of the 90 minutes of Q2 above price. So when price was ending its Q1, we knew we were already trading into 90 minutes. When Q1 ended, we already knew we were trading into a 90 minute. So the idea of the trade was already bearish. So let's run it through to where price was actually inside of this 90 minute. Now I'm going to show you something else. Now we look for SMT between previous quarters, meaning that the quarter that was before the one that we're in, or the one before, But the thing is, you want to use quarter high and quarter low of the daily cycle. So it would be quarter 1, 2, 3, and 4. So it'd be Asia, London, New York, and the New York PM. I don't really use the 90 minute or the micro. Sometimes that could be a little bit too much noise, but it does work. It really does work. But I think when you look at the 5 minute and the 15 minute for SMT and PSP and stuff like that, I think it's just specifically better just to look at the daily time frame, but it's up to you guys. So let's go to how we found out this trade was going to sell. If we draw out a line from every single previous quarter, we can see price on Euro itself took out Q1 high. But wait, GU did that too. Okay. Then we draw out the previous quarter before that. We could see that's yesterday's Q4. But GU on the right has not taken out yesterday's Q4 yet, but EU has. So my bias is already going bearish. That's already telling me, okay, wait, there's SMT between a previous quarter that might not be the one that was just created, but it's one from the past. There's a difference between these quarters. So that's just price in of itself. That's just price. Now this means that in true open, so the start of Q2, so 12 o'clock, let's draw this out. So that's true day open. Let's mark out another one. This would be 1:30, and this would be London true open. I believe. Mark this out as well. Let's make that green. And then let's do the same thing over here. So we have true day open. And then at 1:30, we have true session open. Okay. So now that we have an understanding where our true opens are, we have an understanding of what price wants to do. What we look for specifically is price being above, okay, stacking our true opens. And then from that, what we do is we have PSP SMT. So in this example, I showed that we link 5 minutes between SMT to get our bias. Now, the one thing that you would want to look for is that this price, specifically where that SMT is, needs to be inside of a higher time frame, PSP. So it's a 90 minute or a 45 minute PSP. So yet again, what we are creating is a PSP forming the start and the end point of an SMT with another 5 minute PSP, confirming the SMT inside of a higher time frame PSP. So it's PSP with PSP, confirming SMT inside of a higher time frame PSP, and then using the last PSP as an entry. So it's just PSP. It's just using candles that do not correlate. That is it. It's not using auto blocks. It's not using fair value gaps. It's not using anything else. It's just using this to get trend. It's just using this to get the trade and the direction of our ideas where we want to go. I'm going to show you how powerful this is right now. I'm going to show you this one example. So news came into this 90 minute. We had SMT between our previous quarters. So that's 2 steps. And then what we look for is the 5 minutes. Now these 5 minutes, let's actually turn off the 15. And then we see just 5 minute PSPs between Euro USD and GBP USD. Okay. So what do we see at the top of this move as the news came out? We saw we created a 5 minute right here. So I'm going to draw it out. It's like this. You'll see why. And then we created another 5 minute right here. Okay. Let's link them. Let's look at this one. We created a 5 minute at the same time. Okay. And then the next 5 minute after that, and this is after the true open, after the sweep. So it's after true open, after the sweep. We create another one. So what did we just do? we just linked 2 5 minutes with each other. And between that 5 minutes, we had manipulation or accumulation or consolidation. But in that price stayed technically the same. Okay, so this is getting you out of that area where price will tend to range or tend to create some sort of like an area where it wants to fake you out. It's staying out of the trade that is going to hold for too long. But how do we confirm this? We can see that this first 5 minute was created above on both spectrums, the top and the bottom. Then this one. Okay, so we just had this one being created above on both spectrums. So we just created SMT in price between previous quarters, and we have SMT with our PSPs. And that is your entry. So we have SMT with our PSPs inside of a high time frame PSP, connecting SMT with PSP and entering off of this PSP. That's literally all you do. And then you can target the previous quarter or whatever extra target you have, but we were entering into a 90 minute anyway, so this would have been take profit. But that is specifically what we look for, is just SMT between PSP candles inside of a high time frame PSP. So everything is PSP. If you guys have any questions, just ask in the general chat. I'll post more about this as time goes on. It's a pretty new concept. But if you have any questions, do make a ticket or just ask in the general chat. Thank you so much for watching and enjoy the rest of your day.